Welcome. This is Earnings Central on CNBC-TV18. We have earnings from L&T, and the earnings look largely in line with expectations, with a few hits and misses. I'm going to start off with the headline numbers. The revenue has seen a decline of around 12%. In line with expectations. We have seen a contraction in EBITDA margins coming in at around 10.7%. Operationally, it's slightly better than what the street was working with, and consequently, we have seen the profitability number decline, which is a lot less than the expectations. The profit has dipped as much as 42% year on year. Do remember, this profit number is before the exceptional item that L&T has sold to Schneider Electric, that is its electricals business. As far as its order inflow is concerned, that is the big positive here, because we're looking at an order inflow around 28,000 crores, much higher than the highest estimate of 25,000 crores. More importantly, we're also looking at the decline in the infra segment, which is a lot less than what the street was working with. And finally, coming down to your special dividend, that is also something the street was watching out for. That has come at 18 rupees per share, a tad lower than the 25 rupees estimate that we were talking with, and that perhaps could be a reason for disappointment when it comes to the street. On the whole, however, when you consider the way the numbers are panning out, at this point in time, it's largely in line, at least as far as the top line is concerned, because we are looking at that decline of as much as 10% in its infra segment, and that is something which will stand out, considering it is its biggest sector. But as far as hydrocarbons is concerned, power and electricals, well, once again, we will have to get a better idea in terms of how the street will read into the operational performance of Larsen Toubro. Overall, again, we are also keeping an eye on how things are panning out when it comes to its order book. Well, about 24% of its entire order book now comes from the international, and of course, the order book now is slightly less than what it was in the first quarter. Currently, now standing at around 298,000 crores. And again, a lot will be sought from the management as to where these orders have come from, specifically in this particular quarter. We all know that the company has already seen some orders inflows, and to a certain extent in many other projects, some important ones as well, we have seen it being declared L1. This specific one is, of course, for the Mumbai-Ahmedabad high-speed rail project, a very large segment there. It has been declared L1, and we will be keeping an eye on what the management has to say as far as the outlook is concerned, as well as how execution has been going forward. So these are among the many other things that we are keeping an eye on as far as L&T is concerned. Well, moving on, we also have an update from the infra sector, and of course the infra segment has also secured orders worth around 14,500 crores. So that's the other key takeaway here, because that is the one segment which was picking up to a certain extent, and we're also keeping an eye on the hydrocarbon segment as well in terms of how things may pan out. Again, we're watching for several numbers, and I'm sure we will have a handful of analysts as well to talk to us about Larsen Toubro. Okay, if I'm not mistaken, we do have Prakash Diwan with us. Prakash, good evening. If you can hear me, what's your initial take as far as these earnings go?
Good evening, Agam. Yes, so I do agree. While the numbers seem to be much in line with the kind of expectation that we're building up, the dividend quantum is definitely about 2/3 of what the street was putting it at about 25, 28 bucks. So I think that's a little bit of a thing. But you also probably will get the context when the management clarifies why they've chosen to preserve capital on the balance sheet rather than take it out, because remember, the profile of this company has changed dramatically, even on a YOY basis. If you look at today, on a sum of parts basis, 40% on the consolidated balance sheet comes from the IT contribution. Now, this is getting very interesting. The old age businesses of power, transmission, hydrocarbon, shipping, electric solutions, all of that is actually now morphed into a very new age kind of a business, where financial services is part of it. IT is a large part of it, with Mindtree, LTTS, and LTI. And those things are doing pretty well for the company. So I would believe that people will start wanting to see what the company's plan is to further that and how to use the capital that's being generated, the positive cash flow that's being generated from there, to make sure that it doesn't kind of waste that opportunity of precious cash flows into something which is non-productive or very long-term in terms of ROE build-ups. So from that perspective, that management commentary is going to be slightly more critical to decide whether the stock does continue its recently found re-rating mojo. We've seen it from 870, 880 all the way to 980. So whether the stock can kind of, go further from that, the numbers probably give you the confidence that yes, things are quite okay in that sense. But the management commentary will decide how fast it could move out. So I think very much in line with estimates. I'm pretty happy that the EBITDA also is positively, this thing clocked. It's not just that one-off item which is resulting into a significant profit bump, but the EBITDA is decent and healthy enough.
Prakash, just a question on the special dividend. It's coming at around 18 rupees, and that's also the reason why the stock did make a little bit of a move off late. What do you make of this?
Yeah.
And going forward, it's at 982. That's where its closing is right now. What's your view on the stock, at least in the near term?
So, the 18 rupee dividend probably does not have the weight to carry it too far. But what it also does is it significantly changes the perception that people had with this company, that the company has not been very smart at allocating capital. Now, if they're giving out 18% and more and more money, as I said earlier, is coming from IT and financial services and all, and not so much from those dodgy old age businesses. And remember, they've hived off quite a few. In the last 18 months, if you notice, they've hived off one of the port business, shipping businesses, and now also the electric business to Schneider. So they are getting much lighter on that this thing. So if the management commentary is positive towards this entire process of balancing between the new age and old age businesses, I think the stock will continue its march forward to at least that 1150, 1200 mark. But if the commentary is not very enthusiastic, and just this huge order book has always been a bit of a bane to L&T. It ends up having brilliant order books, but the conversion is always a question mark in India and a lot of times overseas as well. So that is not something which people are going to get very excited about. But capital allocation, how they look at making use of the cash flows that they have, that is going to be deciding the stock. So I would be optimistic enough to put it at 1150, 1200 from here, which is another 20% of an upside for sure.
Should we leave it at that? Thank you so much for joining us and giving us your initial take on Larsen & Toubro. But we have earnings from yet another important nifty company, and that's Axis Bank. We have Abhishek Kothari with us, who can take us through these earnings. Abhishek, good evening. What's your take?
Good evening, Agam. The results are better than expectation, at least on P&L front. So if you look at the NII growth, that's robust at 20% YOY and about 5% sequentially. We were working with a number of 16.6% YOY growth in NII and a little under 2% on a sequential basis. They have lost out on yields, but they have made up, in terms of cost of funds, which has aided in robust growth in net interest income. So the net interest margin at 3.58% is perhaps at a 6-quarter high. Last time it was at 3.4%, which has jumped to 3.58% right now. Operating profit growth is pretty strong, growing at 15.9% YOY and about 18% sequentially. This operating profit growth is not led by, decline in OPEX, but a strong top-line growth. Coming on to asset quality, the gross NPA is reduced to 4.2 versus 4.7%. Net NPA little under 1% when compared to 1.23% quarter on quarter. Business momentum, the loan growth has slowed down a bit. We were working with a 10% growth. It has come in at 10.5% growth, which is at a 14-quarter low. Deposit momentum has picked up. Last quarter, they saw a quarter-on-quarter decline in deposit, but this time around, they have picked up in deposits. On the flip side, or on the negative side, the total watch list has increased massively by more than 4,000 crores. So the funded watch list has increased by 42% quarter-on-quarter to about 9,118 crores. Non-funded watch list, that has increased by 32.5% quarter-on-quarter to 4,928 crores. Total watch list has increased by 38% quarter-on-quarter to 14,854 crores when compared to 10,753 crores. So this watch list now forms about 2.6% of the book versus 1.9% on a quarter-on-quarter basis. We have Siddharth Purohit with us. Siddharth, good evening. What do you make of the numbers?
Yeah, Abhishek, you rightly said, on the P&L side, the number looks good. But the business momentum seems to have really a bit slowed down. Particularly, no doubt, on a quarter-on-quarter basis, as you said, deposit has marginally grown. But there is somewhere down the line that there is a visibility of some moderation, which is very natural and given the current environment. But from the quality front, which is the key monitor at this current environment, I feel that, on a pro forma basis, if you, see they mentioned that, the GNP and the reported number has gone down, but on a pro forma basis, probably GNP should have been 4.28%. That's what they mentioned and the footnotes. So we've seen this, but I think that watch list has again gone up. So probably this is something which is a point of worry, and now that restructuring and all things will start up from this quarter onward. So probably I'll not take
The
this
audio
quarter
is not audible right now. We'll excuse for that. But one look at the numbers, the numbers do look better than our poll. The NII has come in at 7,326 crores. We were working with 7,115 crores. The profit is higher than our poll. So our poll was at 1,617 crores. It has come in at 1,683 crores. We have Bunty Chawla from IDBI Securities. Bunty, what do you make of the numbers?
Yeah, on the headline per se, as you have rightly said, the numbers are better than the estimates, be it street estimates, be it our estimates. Though we need to see what is also on the performer numbers. If we compare with the two large private banks who have reported numbers, there was a sequential stability in terms of gross NPA on a pro forma basis. However, on the Axis Bank, we are seeing that on a pro forma basis also there has been a decline on a sequential basis in terms of gross NPA. That is one positive. And now main focus or main will be the management commentary. If you remember correctly, last month only, management, Mr. MD of Axis Bank has said there has been slight increase in the moratorium number. So last, as I remember correctly, it was 9.7% as of June 30. So we need to see that number, how it has panned down. And secondly, there has been some restructuring or a restructuring requirement or from borrowers, as Sir has said previously. So that needs to be the main number, how will restructuring pan out and how the moratorium and collection efficiency in the month of September is. So this will be the more focused area for the Axis Bank as such.
Okay, thank you, Bunty, for that feedback. The analysis do show that, Axis Bank's numbers, at least on PNL, is much better than what the street was anticipating. However, the flip side could be the watch list, that has increased by more than 4,000 crore, which could weigh on the stock performance tomorrow. So that's it from our side on Axis Bank's result. Keep watching CNBC TV18.